Hovering just near the worst levels of the day so far, and as stocks continue to sell off, it's time for today's three-stock lunch. So here with our trades is Sylvia Jablonski, the co-founder and CEO of Defiance ETFs. Now, first up, Sylvia, it's got to be Broadcom. I hate to do this to you, but it's a story. It's a big one. The stock is a big loser today. It's taking a tumble along with the rest of the entire market. The chip maker reporting lackluster. Well, I shouldn't say that. They actually reported good third quarter results. They blew past expectations, but gave somewhat muted guidance. The stock is now on pace for its largest percentage decrease since March of 2020. That was during the depths of the virus pandemic. Sylvia, what's the trade on, I'm going to say Avago, because that's what the ticker is, Kelly.
Hi, Dom. Well, I think that, the word biggest loser was used. I think today's biggest loser is going to be tomorrow's biggest winner. This, for me, is an emphatic buy on the dip. I love this stock. I think that, they're one of the best chip providers out there. So you need Broadcom chips for any kind of complex infrastructure, data center development. They're part of 5G, 6G, the wireless side of things. Their biggest clients are Apple, Google. They touch all of the Mag 7 names. Earnings were very good. I think, you talked about it in the last segment. I think the market just is expecting a little bit too much. And there's this, overzealous need for future outlooks that are, kind of higher and higher. But I think what we're seeing here is it's slow and steady. The AI race continues, and these solid stocks are going to continue performing. So I love this name on a pullback. We even launched a levered ETF on it. There's just so much demand for this and bullish outlook for Avgo.
Well, I was excited until you told me about the levered ETF, and now I'm thinking maybe there's still too much euphoria. Speaking of solid names, though, Sylvia, let's talk about 3M. Morgan Stanley just initiated coverage with an underweight and $125 price target. It's about $3 below where we are now. It's rallied 30% over the past 3 months. And a lot of talk about the new leadership and so on and so forth. Why do you think this one's an attractive name?
So I like this name. I like it for a longer term hold. I think Broadcom will play out a little bit sooner. But if if you're looking for a stock that's on sale that can play out in the future, they've had kind of a rough 4 to 5 years. They haven't done a whole lot. Over the last year, it's about 50% of performance. They've settled their lawsuits. They cut their dividends so that they have some efficiency and cash flow. And now they're investing in parts of the market that make sense. So climate tech, in the industrial robotics part of the market, kind of the AI trade and data centers instead of, some of the businesses that they were in before that weren't profitable. And so with a new CEO, it takes time to kind of clean up shop, but they do still pay a 2% dividend, $400 million buyback. And I think they're starting to perform and they're on their way to making changes going the right direction. So I think it's like a 2 to 3 year hold for me, though. Versus, again, Broadcom being more short-term play out.
All right. It's a blue chip name as well, so it's not unheard of. Finally, Sylvia, let's talk about Bolero, a bright spot in today's market sell-off. Those shares are higher after the bowling alley chain company's revenue for the fourth quarter topped Wall Street expectations. What's the trade on Bolero, and how much more am I going to be bowling in the coming months?
Yeah, I mean, I hate to say this because it's just such a fun company, right? Who doesn't like bowling? And I think they go at it in a unique way. It's a kind of like the higher class, entertainment type of bowling. They have a media vibe to what they're doing. 300 locations globally, a lot of M&A activity. But I think, they've done quite well, but they are slowing. So if you look at revenues, we have about 12.5%, which is good, but slower than it has been for the last 3 years. Their growth outlook is about 6% or so overall. That's lower than it has been. Margins are lower than they have been. And I just can't get excited about, hyperbolic growth potentially happening in the bowling industry. So great company. They're leaders in their niche, but not a buyer here.
All right, Sylvia, before we let you go, I'd also like to get some commentary on the broad market sell-off right now. You are somebody who watches a lot of ETF flows, mutual fund flows, that sort of thing. What are those flows telling you about just how deep a potential pullback could be in this environment?
I mean, if I can, reference our own flows over the last couple of days, we've seen a lot of flows into Supermicrocomputer, into Broadcom, into MicroStrategy. And so that tells me that investors are buying on the dips here. They think that perhaps that the market will recover. It's an election year. We have a couple of months to go. September is seasonally terrible. We got this slightly weaker jobs information, but the Fed is on their way to cut. And we have, for all intents and purposes, seen a soft landing here. Corporate earnings are great. 90% of S&P 500 had increased EPS. I think, 2 to 3% GDP, double-digit growth. We're in a good spot for a recovery into year-end. I think it's going to be volatility's par for the course at this time of year.
Okay. Sylvia Jablonski, thank you very much for that. We'll see you soon.
Thank you.
All right, keep it right here. We'll be back after this break.